All right. Well, good morning, everybody, and I want to welcome Malcolm Chitty. He is an independent insurance, or he's with an independent insurance firm. Is it Robinson and Stith? Is that? Am I saying that right?
Yes, sir. Robinson and Stith Insurance. Yes, sir. I said it wrong the first week I worked there anyway, so it's
Well, Ellen recommended you. She has sent several clients your way. It sounds like, and knows and bets for you with her experience in the industry. If she recommends somebody in insurance, then they must know exactly what they're doing. So I thought it would be nice to connect with you and to invite you to speak with the team to tell us a little bit about what's happening with insurance in 2026. So I've got your presentation, which I can share
yes,
when you
sir.
want me to. But if you just want to give us a little overview and let me know, and I'll share the
Yeah,
screen and go from there.
of course. Of course. So I'm not one of the guys that have been in insurance for my whole life, but I'm getting there. It feels like every day is a battle, but especially with these rising market costs, and we'll go over that in the meeting as well. So I have time in a more competitive area realm with Greensboro, and I was also a captive agent. And then I have time as being an independent agent, so I can speak from both sides of it and what we see in the marketplace, what we see in the coastal region, what we see in the Piedmont region. So different sales. And sorry about the background noise, guys. My office was acting funny, so I went to the local coffee shop. So I'm very sorry about that. So let me know if I need to mic up. Um, but yeah, so I was born and raised in New Bern, North Carolina. I came across Ellen actually. I was on the MLS leads and I was hunting for business through there. So anytime something would go pending, I would reach out and say, "Hey, I'm Malcolm from Robinson and Stith. I'd love to do an insurance quote." So if you ever see anyone else doing that, don't talk to them. Only me. No, I'm kidding. But
I thought it was brilliant. I mean, I needed to talk to you just because of the marketing skill that you had to think about that.
because I thought, what is different? What's something that's going to captivate and what's something that's really going to get me on the edge? Because a lot of people are coming in, when the closing time, and it's a little bit too late. So I thought that would be a good way to get in. But we can go ahead and reach into the PowerPoint if you want, and I can go ahead and talk off some of the points. And then if you guys have questions, feel free to stop me at any point.
Great. Hold on just a second, and I will share that. Let's see.
Yeah, most of you guys know that my husband is an insurance agent, right? And he works for farmers. So for me to use Malcolm, that says a lot in that. And the reason why I do, one, he's amazing at what he does, and he's very communicative, and he's great with our clients. But it's also that difference between independent versus a brand name, and the amount of carriers that he has, and the ability to find a carrier for the right house, right, or the right carrier for a house. And in this marketplace, we're definitely seeing these carriers make a lot of changes to what they'll take and what they won't. So appreciate that you can do that all the
Anytime.
time.
And thank you too. I know I've been working with your husband on a couple of cases recently, and it's just fun to get his experience as well, because he's leagues above me. So it's nice to talk to someone that actually has a handle on stuff, and then I can kind of relate from being the captive.
Yes,
So
yes.
we're going to talk about rising insurance costs. We're going to talk about trends in different areas, and then we'll also speak a little bit about what to look for when you're with your buyer on a home. So we can go ahead and kick it to that second page if you'd like. All right. So, as everyone knows, there are a lot of national premium growth. So we actually just had a meeting with Mike Clausey, the insurance commissioner of North Carolina. He told us that he was going to go to Washington and fight for us. Don't tell him I said this, but yeah, I don't know. There's not a lot of fight going on. So get ready, get locked and loaded. And if you can, and you don't have to use me, use an insurance agent and always get a quote, a soft or rough quote on a home from someone you trust, because that helps a lot with what goes into that mortgage. It goes into the price monthly, and that kind of helps the client see if they can afford it down the road. So insurers are increasing rates, offset climate. So what we're seeing is a lot of severe weather happening we're seeing, like the snowstorm. I don't think people were really ready for that. And that's something that's hitting the coast. That's something that's hitting the Piedmont. So that's something that next year we might see rise. Um, we also have in North Carolina's homeowners base rate increase is 15%, and that's going to be probably around June. We'll start seeing that go up around 15%. Now, that won't happen. It'll happen in their renewals. But if they're renewing around that June, August area, we'll probably see that go up. Um, Rentals and secondary, guys. So when you guys are having these talks with people that want a beach house, that want a little condo in Raleigh, and it's not their permanent home or it's their little secondary home, never think just because it's secondary it's going to be cheaper. Most of the time it's going to be more expensive because they're A, not going to be there, or B, someone else is going to be there that's not going to, in the eyes of insurance, respect their property, and they're not going to be there all the time, so they can't watch their property, so they're going to try to make that go up higher. And you see down in this little figure, 40% in coastal areas is probably what it's going to go up insurance wise, which is going to be crazy. Do we
That's
have
on top of what it's already gone up.
Mhm. What did you say, Doug?
Can I ask a question about the secondary home thing?
Yeah, of course.
I own a secondary home, so I'm curious about the rationale behind that, because it's not like a guest is maintaining the roof or the exterior or anything that's going to be covered by home insurance. So how is that? Explain that to me a little bit more, please.
Yes, sir. So what I was told was, you think of when someone goes to your house, someone uses your property, they're not really going to treat it like their own, is what the insurance company is guessing. Now, you might have really good tenants, you might have really good Verbo, Airbnb users, but insurance isn't thinking like that. Insurance is thinking you're going to get a bunch of 18-year-olds in there to throw a party. So that is kind of their rationale behind it. Also, they have had a lot of that happen, especially at the beach homes. They've been seeing a big increase in parties. They've been seeing a big increase in, oh, so and so fell down and went through the drywall. So then that's a claim, or leaking pipe, stuff of that nature. So that's their rationale behind it.
And I think it's also that secondary absentee owner. So
That's where I was gonna go, Ellen, because not as much for a rental, but we are in the works getting, and I spoke to Malcolm, very helpful, a second home down on the beach. And we can't rent it. It's not it has to be a 28-day or longer rental. And the rates were quite a bit higher. And I'm like, we're actually not renting it, and it is a second home. So it stinks for people like us.
it does, because you still get whacked for that rate.
Yeah.
And it's because you're not going to see the H2O heater leaking until your neighbor calls and there's water pouring out of.
Now that makes sense. That I get it. Yeah.
And April, that's a really good point you raise as well. And I know we had talked about that. So what we're seeing in a big trend is NCJUA right now, so North Carolina Joint Underwriting Association, is going to be our main proponent. And instead of doing condos, so Ellen and I actually had this, I had quoted a DP2 and I had quoted an HO6. So we were looking at a standalone place, but they only own walls in. To do something like a short-term rental, Frontline wouldn't cover it. Markel would barely cover it. If they did, it was very out of price. So NCJUA was our last stop resort, and you have to do a DP2, which is a dwelling property too, and then that kind of strips away some of your, I mean, a good bit of your policy. So you're kind of sitting here and you have a little bit less coverage. You can only get 300,000 liability. What I would say is get an umbrella for that. But it really makes it hard to do a short-term rental. They don't want to do Verbos. They don't want to do Airbnbs. We're seeing a lot of that. And they want to do something like through the real estate companies. I don't really know how that works, but I know that there are long-term rentals through some real estate companies that you can get, but they're really only gunning for that, the 20-day over period right now, which is kind of crazy because no one wants to rent for 28 days. Really, people want to jet in, jet out.
Yeah.
Any questions, concerns on that? And Doug, to your point as well, owning that secondary, I know that that was my idea as well. I wanted to get a property through Ellen, fix that up, rent that out, then keep going. But it's crazy for insurance. Even for me, I can't finagle my way through it. And
Oh,
if I did, I don't think I would be the best insurance agent, but it's hard, it's hard to kind of figure out a well-structured balance. And we have about 125 different agencies we can use, well, carriers through our agency. So it's crazy. Only about 5 of those will do a short-term rental.
thanks for explaining that. I appreciate it.
Fine. Anytime. And then we can go ahead and click to the next one if we want. All right. Why it matters for your clients. So higher insurance premiums can definitely affect the affordability. So what we're seeing a lot lately is Ellen will normally get me to do a soft quote on something. I have some real estate agents in the area too that'll get me to get soft quotes now because there's a lot of people that are scrimping and they're like, okay, well, we can get the mortgage, we have that in our pocket. But then you look at the insurance and where Ellen and I are thinking, okay, 1,500 for the year, it's 2,500 for the year. So it really does create that strain on the wallet. So that's another thing we're seeing is, if you want to make these deals and if you want to have these clients come back to you, refer you, you should really honestly have that in your back pocket because it shows that you did the work behind the scenes. Okay,
It really
Coastal
does. Oh, go
What were
ahead.
we going to say, Ellen? Sorry.
It really does matter because, DTI is such an important thing in our business and we get that part. But so many of our mortgage partners are still putting $100 a month for insurance. And we need to make sure that they're well versed. They're putting $300 a month, especially on the coast, because most premiums are even on new builds. They're up in, the 2000s for sure, closer to knocking on the $3,000 wall. And who knew, that really takes a hit on the monthly.
And then the coastal properties are now facing double-digit annual increases. So we talked about that. We talked about the 40% that we're going to see. So that's going to be a big thing. We're seeing a lot of people come from tons of places, New Jersey, New York. We're seeing a lot of people coming from California because it's more affordable. Well, they're also driving up. So that's what Mike Clausey was talking about when he came to our office is we're seeing all these people that are willing to pay more. So the insurance companies are thinking, hey, I don't know, it kind of sounds used car salesy, but they're kind of thinking, hey, well, if they're going to pay more, they're going to do more to the property. So then they're going to have to raise insurance. And a lot of times you see this where you see people buy these bare bone properties and then redo the kitchen, redo the bathrooms, redo the bedrooms, and then they don't account for it. So they don't call their real estate agent or insurance agent. They don't say anything about it. And then they're at $350,000 per dwelling. And then next thing you know, it's $500,000 that they really need a dwelling. They have a total loss. And then they're kind of out on their butt. They're paying that extra 250,000 to whatever thousand they need to. So we're seeing a lot of that. So they're trying to combat that too. Ellen and I had a property actually not too long ago at the beach, and they wouldn't let me go to the dwelling that we had the replacement cost coordinator guide on it. They wouldn't let us go to that price. They said we need to go 50,000 up, which made it kind of, I was out of the race by then price wise. But we're seeing that a lot lately is we're seeing them not wanting to undervalue, which is good, but I think that they're kind of trying to get a course correction and they're jumping ahead of themselves right now.
Right.
It's kind of crazy what we're seeing right now.
And just a little insight. So the insurance bureau, they can't just rack up rates just because they want to, or just because they feel like people are underinsuring. They have to actually provide all their data. Okay, we had 100% loss ratio in this particular county, and therefore they're allowed to bring those rates up a certain percentage. So the fact that they're getting a 40% increase on rates after last year having a 40% increase really tells the story of they're bleeding out. And until that resolves itself, we're going to continue to see these 40% from the storms, from the undervaluing, et cetera.
Exactly. And I know you guys have probably seen Buxton, North Carolina on the news where all the houses are slipping into the water, stuff of that nature. Well, they're not going off of just Buxton area. They're going off of all coast now. So if three houses slip in the water in Buxton, they're saying, okay, well, Kitty Hawk, yours is going up. Atlantic Beach, yours is going up. Parker's Island, yours is going up. Surf City. So they're really just kind of playing this big numbers game, and it's really affecting us all for just small spots and pockets along the coastline. And if we want any questions, concerns on that, a lot of concerns, but
Right. I have a question because we here in North Topsail Beach, we have a portion of the beach that is has a lot of erosion, beach erosion. There are sandbags up there. There's properties all along that line. If they're taking out a policy, a property policy on that particular property, is there a payout or is that considered a pre-existing condition if it slides into the ocean?
so I think that we were working on this not too long ago. It was that condo complex with all the
Topsail
sandbags
Reefs.
in front of it. Yes,
Yeah.
ma'am. So that actually look into your HOAs when you see that. Get the HOA from the condo association, from whoever has it, get the master policy and see. Now, normally you lose that much land, you're going to see in about 5 years that whole place is just going to go into the water. That won't be covered. That's an active national disaster. So you really have to kind of be straight with your clients on that and say, hey, is it worth paying a discounted rate on this house? You know, it's going to be more in insurance, but you can probably get it for 50,000 instead of 250,000, what it would be when it didn't have problems. But you're probably going to lose it in 5 years and it won't be covered because insurance isn't going to cover it if it slips into the ocean. Insurance will cover it if it catches on fire, if lightning strikes it, if, you know, you have a big flood. Always make sure flood insurance is on it too. Ellen and I have gone through multiple condos where, you know, the HOA or the condo association will say, hey, you know, you're covered for flood. Well, the outside and the walls are covered for flood, but you have to pay for everything inside of it. And if you don't have flood insurance, then you're up the creek, buddy. So you got to make sure that you're getting your insurance agents to look at that as well. Kind of go dig a little bit more into it. It doesn't take that long. It takes normally 30 minutes for me to find something like that and then report back. But that's a good way too. You can keep your clients safe and kind of know what you're up against as well.
And that's
Because
the
that-
master policy. So if
Yes, ma'am.
we're quoting something, any condo or townhome, we should be asking for the master policy during our due diligence prior to making the offer, because that will tell us what type of insurance policy will have to be written. And partnering with Malcolm or some other agent, you're going to be able to, again, have some idea of what type of coverage is going to be needed and what it's going to cost.
And now for something like that, you're going to see NCJUA all the way because that's North Carolina sponsored. So it's going to be one of those kind of stripped down policies. It's a good policy. They always pay because they are backed by North Carolina. But at the same time, it's not a frontline policy. You know, it's not a Markel policy. It's not a policy that has mold in it. It's not a policy that has fungi in it. It's not a policy that has all these bells and whistles to really protect you. Water sewage backup's a big one. So that's something you need to kind of watch too. Do we have any questions on the slide, guys? If we want to go to the next one, we can. Okay. All right. So I think that you guys all probably heard a couple years ago where insurance was using the updated Google Maps to check roofs, to check the houses. I don't know if you guys heard about that, but that was a really big deal for us because a lot of people were in the middle of fixing stuff. A lot of people just didn't clean their roof off after, winter. So they had pine needles on it. And a lot of people were getting non-renewed, canceled. So that was a huge stir not too long ago. And so we'll be kind of looking into climate risk and technology shaping insurance. But all right, so climate related losses, dry pricing. So severe weather, floods, of course, inclement weather like the snowstorm. I mean, I'm hate to say it, but I'm pretty sure that the snowstorm is going to have some sort of effect in 2027. A lot of underwriting, like we were talking about Buxton Beach, that Outer Banks area, they're looking at those smaller pockets, the topsail, and they're saying, hey, if this can happen right here, it can happen anywhere else. So that's kind of where they're equating everything. That's why, if you look in Raleigh, it's going to, of course, be a lot cheaper than it is on the beach, but sometimes it's not. Sometimes, like, we were looking not too long ago in Jacksonville, and Jacksonville is not necessarily close to the water. It's kind of more a little bit inland, and it was still kind of outrageous. It was just crazy. So always try to get a beat before you tell someone, hey, it's going to be X amount. Just try to get a quote out on it. Okay, so risk models. So they're using a lot of AI, satellite data, like I was talking about a little bit earlier. So a lot of this stuff, we all know the big scary AI. I don't really like AI that much. I think it's dumbing people down. So we're kind of looking at this and we're kind of taking that as like word of God, but it's not. It's AI can be wrong, AI can be right. But they're really taking that into consideration nowadays, which is kind of scary. They're not having their underwriters, they're not having their people go out, their adjusters, their appraisers, they're not having them go out anymore. They're just using pictures that they get. So that's a big thing too. We're seeing a lot of where we have to go out ourselves, take a picture, send it to underwriting to get the house approved. Because some of these houses are magnificent, but they won't be approved because there's not a fire hydrant within 1,000 feet, something of that nature. So we're seeing stuff like that. We had a house the other day, it was immaculate. It was in Nicholas Sparks's neighborhood, actually. And it had pine straw on the roof. So they non renewed it. They were like, hey, we can't renew it. We got to do a cancellation on this. You got to find somewhere else. So I thought that was actually really crazy.
Yeah. I think the big takeaway for on this slide for us is that just because the seller, and we always see this, seller has a policy that is $1,200 a year, right? And we can't assume that even if it was 5 years ago or even 2 years ago, that our buyer is going to be able to secure a policy for that price. I know recently there was one I was helping an agent with that the folks had bought it for 15 years ago and it was way underinsured and it was right on the water and or close to the water and the policy coverage just wasn't even equal to what it should have been. And the carrier had changed their view on a couple different things. So not only was the policy going to be almost triple of what the seller and the listing agent was telling us, but there was a component of it where the roof was really in rough shape, not terrible shape from the naked eye, but it was 20 plus years old, and they were going to even have trouble finding a carrier to take it. So I think that we have to be really careful as realtors, and when the listing agent or seller is telling us, hey, they have a policy with State Farm at $1,200, do our homework, get it pre-quoted.
Yeah, and do exactly. I mean, we're seeing a lot of these people because you can grandfather in sometimes insurance policies. I'm sorry, there's a hooping and hollering, but you can grandfather in sometimes these insurance policies, but that doesn't mean that the insurance policy is right. So you do see a lot of times where we got a buzzer. Sorry about that. Where you get these homes and these people, like Ellen said, 15, 20 years, they're NCJUA, they might have redone a kitchen, they're older couple, they don't really think to call their insurance agent. Then you get a new family in from New York who's going to redo the whole place. Well, they want that 1,200 a year. but they're going to get hit with a 3,200 a year. So you got to just make sure that you're doing it right, because they may be able to get grandfathered in for that first year, but once the underwriters, once the appraisers take a look, you're kind of done. I mean, the magical year is gone, and now it's time to pay that 3,000 X amount of money, and you're kind of looking at yourself like, okay, well, can I pay my mortgage now on top of this? So that's something too. We're seeing a lot of climate changes with, I know mortgage is a big problem. I can't really speak on that because that's not my field, for people paying it, people defaulting on it. So it's, a lot of people are strapped for about $100. If they went over that $100, they'd be bankrupt. So you see that and you see the change, and it would be an extra $1,000 on the year to $2,000 a year. So that's really going to decide if they can live in that house for a long time or not, if that makes sense. And what were we going to say, Doug?
Definitely.
If we want to look to proactive incentives, so we have roof shutters for beach properties. You want storm shutters. You want roofs. Hip roofs normally are better than gable because it'll give you a kind of discount. Now, whether it is $100 to $300, that's kind of up to the carrier. Frontline will normally do $300, and NCJUA will normally do about $200. We see Markel do sometimes $400, sometimes not. I know that there are storm resistant roofs. I don't know if that's just a big roofing scam. I don't know about that. I can't speak to that. But there are certifications that you can get for a certain amount of wind coming at you, mile per hour. So we can also look into that too. Ask the current, seller what they have, if they have anything like that. Smart devices. So they want a big thing too in homes. If they have ADT, if they have a fire, I don't know some of the companies, but there's fire alarms that go straight to the fire department. There's alarms that go straight to the police. That'll give you a discount. But even a Ring doorbell can give you a discount. Now, it won't be as big. So local would be like a Ring doorbell and a smoke detector. And then you can get specialized alarms, and then that'll give you a bigger discount. So that's something to look at as well. But it's kind of, you're going to also have to pay like $300 on the month for ADT and for something like that, the fire alarm that goes right to the fire station. But you can get something as simple as just a Ring doorbell on the front and a smoke detector and carbon monoxide, and you can ride that $100 discount out too. Now we're seeing a lot of stuff in Raleigh kind of starting to trickle down a little bit and kind of stay in a certain area where we can kind of call. Greensboro, we're seeing stuff in an area where we can call, but Helene, so when it came up into the mountains, we weren't expecting that. So that's another thing that's going to make these prices increase in the 2026 mid year. So that's why we're seeing something like that too, because they thought, okay, well, it's never going to flood the mountains. It flooded in the mountains, and now everyone's freaking out. So, they should, but it's still crazy. All right. And then I just said always secure a quote from a trusted agent. Just make sure that you get that, because you don't know what's going to happen. I've told Ellen before, I've said, hey, it'll probably be $2,000, but let me just go ahead and quote it. Let me make sure. And it's $3,000. And then, if I didn't say, let me go ahead and quote it, I'd look like a fool. So I'm glad I did.
Which then makes us look like if we were just taking it for a grain of salt, like, yeah, it's going to be in and around 2000. I stopped doing that with the climate the way it is right now, and the adversity and rates and how things, even NCJ, who used to be, you could almost bet a dollar on, okay, this size house, it's going to be $1,800 all day long. And they're more like 2,600. So really important if you're going to state something, we want to make sure that we're accurate. So it doesn't take much. It takes 15 minutes to get a quote, a pre-quote, and you don't need any information other than the house information.
So exactly, when Frontline came into North Carolina, it was beating NCJUA because NCJUA had been here for a while. And then Frontline started to slowly go back. NCJUA came up, and NCJUA was beating them because they had to get competitive. Well, now it's going back to where we're seeing Frontline actually beating a lot of NCJUA, and that's more coastal region. You'll see that, but you're also seeing new players like SageSure come in with like SafePort, IUA. You're seeing all these other companies make little tree branches off companies that are trying to compete. They're trying to get technical, but sometimes they're not trusted choices either. So I know I don't want to dig on any company, Farm Bureau, State Farm. I mean, there's all these companies that, you're kind of price locked into a place. So if you can find someone that's independent, they can kind of give you double options. They can come up with about 3 quotes and your client can pick from that. But at the same time, those agencies do have some upsides to them as well sometimes. But you see different ones like Nationwide come in. Nationwide's come in and they said, hey, we're back in North Carolina, but you have to have your auto with us, and it has to be, I think it's 2012 and newer. And they're also going off of some mileage sometimes. So we're seeing that in certain cases. We kind of drop them off. We don't really want to deal with that. But so you're seeing these insurance companies get super picky. So they might pick up the home, but they're also saying, hey, we need to bundle in the auto. We need to get this. We need to get that. So you almost don't want to take that time. If your client's State Farm for life, and then they're like, okay, well, we can leave the cars with State Farm and we can move this over here with this company. Well, that company might win everything. So just make sure your insurance agent knows what he's talking about before he says, oh, I found you a great quote.
Yeah, for the most part, independent agents is definitely the way to go. But I will say that there's one time where, and I know Malcolm, you worked really hard, and the closest you could come was like $3,000. And my folks were actually moving from New York, and they had State Farm for 20 years. And when State Farm is one of the unique carriers that allow this, when you move to another state, you bring all your good credits with you. And they were able to, it wasn't even coastal, it was Willow Springs, where I was writing this policy, and they were able to write the policy for $720 because they use all their State Farm good neighbor, whatever credit. And so always when you're in a bind, and, ask who do you have right now? If it's a national carrier, they might be able to get some discounts, especially if they've been with that national carrier for a long time.
Exactly, because I used to work for State Farm, so that's something too. If they have State Farm, exactly, ask. Say, how long have you been there? If they have good driving records and stuff, if they have good no claims, then they're definitely going to beat the crap out of some of us. So it's crazy to kind of see what can happen in shifts. Because I had 120 companies coming at that one quote, and we couldn't touch it. So it's like
that was an outlier. But no doubt, State Farm will lose their shirt on that policy, but it's more about keeping the customer happy, and that's how they see it. So definitely ask the questions when you get into that DTI situation where insurance is just out of the ballpark, that what you expected.
And I also don't want you guys to think that insurance is just going to steadily go up. They're going to have to get competitive with each other. All of these different carriers are going to start having dog fights with each other. They're going to start going down. They're going to see, oh, Progressive went down, State Farm went down. Okay, well, we have to go down. But then it's just a finagle up, finagle down, finagle up. So it's following a trend, but it's who will crack first coming down on prices. So that's just something that we got to keep our eye on. All right. Do we have any questions on this slide?
Good.
So just take away, get everything updated, make sure roof's updated, make sure electronics are updated, make sure stuff of that nature. We can go ahead to the next slide. Sorry about that. All right, coastal versus inland. All right. So I did Atlanta Beach, Surf City highlights. There's a lot of higher premium growth, like we talked about, and I don't mean to sound redundant, but it took me a while to get some of this stuff into my head because, it sounds fairly easy, but then you get certain properties and they're super low on the price scale, and then you get certain properties in Raleigh and they're super high on the price scale. So you just got to kind of watch it. Okay, so catastrophic exposures. So going into it, we talked about Helene. So now some of those properties in the mountains are getting super high insurance wise because they don't want something like that to happen again. And if it does, then they want their money. They don't want to have to pay out of pocket. No one wants to pay out of pocket, especially insurance companies. And I'll be the first one to say that. So you got to kind of watch that. All right. Insurance availability. So some carriers are tightening with underwriting. We were talking about that. Some carriers, like Frontline. Frontline has a button on it. It's one of the carriers that we use on the coast. They say basically, you can't do it. We'll come out there and we'll do our own underwriting, as to where sometimes the agents can go out there, take pictures of different properties with certain ones. A lot of these companies are now starting to send their own people. SageSure as well, Safeport, they have a couple branches off. You're seeing that a lot. You're seeing a lot of the appraisers sometimes go out with these underwriters and kind of say, or the appraisers and the underwriters just teaming up. You don't really see that a lot, but they're teaming up now, and they're kind of going and say, I said that this house was 350,000. Well, they go out there and they'd say, hey, I think it's 450. So either we're going to cancel this policy or you need to raise it. So that's another thing too. Make sure that you're not coming in too low. Okay, and then inland, lower risk areas. So it's more moderate. I mean, you guys know if you quoted the beach and then you quoted Raleigh, which one would you rather pay? But also flood risk. So I try to put that in there. We're seeing a lot of this stuff happen where there's overdevelopment in some of these bigger places. The water doesn't have anywhere to go. So it's starting to flood out smaller neighborhoods and smaller pockets. So they're starting to look at that as well. Because if you're digging, taking up a bunch of ground from one spot, the water's got to go somewhere. It's flooding in these older neighborhoods. We're seeing that too. So that's kind of, it's not prevalent, but that's something they're taking into account. And they're not coming out of these with these numbers out of the air, but at the same time, it's one of the things that I'll say it a million times, and I'm sorry, but just get a pre-check on the house. And also, if the buyer's like, hey, we're going to get grandfathered in, don't even worry about it. And if you just look at the dwelling and it says like 250,000, well, if the house is now worth 500,000, kind of catch them on that. Say, hey, maybe get the seller right now to get an updated quote, something of that nature, if you don't want to do it. But just make sure that you're in the right ballpark. Okay. Any questions on this one?
Good.
All right. We can go ahead to that next slide. All right. So this one's carrier's appetite. All right, we have HVAC, roof. And sorry if I'm not reading these off for you guys. I know that you all can read probably better than me. So I'm just kind of going in and out of what I think is important. I don't want you guys to have a classroom feel. So age. Age of the house is going to be a huge thing. Actually, it's funny enough, we're seeing some of the houses that were built in the 70s to 80s being cheaper than some of the houses that are built in 2025, because some of these builders are not the best builders, but some of them are good. So you'll just kind of see that record. So don't think just because it's a 2025 build or 2026 build, it's going to be cheaper. Condition. So home systems as well. Roof age is big. If it's over 15 years, you're gonna kind of be in a tizzy, and you're gonna have to go NCJUA. Electric, always try to make sure it's at least updated in 2006. HVAC, trying to have that at least 2015 or newer. If you want a discount on it, because that'll normally give it a discount. Roofs, 20 years, you're kind of pushing it. You might want to go to NCJUA. I don't know if I said that. Plumbing, guys, watch out for the house that I'm closing on had some piping issues. So that means I could only go to one place, NCJUA. And you'll hear me say NCJUA a lot. It's not a bad company, guys. It's not a death sentence. But NCJUA means you have some problems, you got to fix it, you got to get them back. So the poly
The
piping, they
poly,
don't want to see that. What were
yeah,
we
Malcolm,
gonna
I
and
say?
got a question.
Yeah.
Can you hear me? I'm sorry. I'm
I
trying
can.
to test a new microphone. Am I good? Okay. Um, Polybutylene, is that something that you run into problems with when you find a home? Is that always, is it the pipes itself or is it the fittings?
So that's a perfect question because
Thank you.
normally,
Keep the compliments coming.
I got you, King. Normally, it's, they want the fittings to be something of copper, but now we're seeing that they're getting really technical and they're saying if it has any poly B in it, NCJUA, you're good. You can hang out there. Once you get it fixed, you can come on back, but it's kind of almost a death sentence right now to have
Okay.
any sort of poly B because I know we had the fittings were copper, but the pipes itself were poly. So they were kind of death sentenced me off to NCJUA, which isn't bad, but at the
Okay.
same time, it's
A
just
follow up about that, and I'm sorry, I'm in
no.
Chapel Hill. I don't know what NCJUA is. I've never heard of that in my life. It seems like it's much more prevalent and intense, the insurance situation at the coast, than it is here for good reason. Just a 10-second debrief because I don't want to get you off of your presentation. What is NCJUA? I don't know what that is.
So it's North Carolina Joint Underwriting Association, so it's ran by the state. So they're backed by the state as well. So that's what we're going to see a lot here in the coastal regions, them using. But a lot of the times, too, you're going to see in Raleigh, in areas like that, you're going to see something like Sageshore, something like State Farm, something like Farmers Bureau. And what they're going to want to do is they're going to want to get down and dirty. They're going to want to take someone out there, they're going to want to take their own pictures, and they're going to go and say basically, hey, you know, we don't want this poly B, so we're going to send you off to one of our smaller branches that can kind of have a little bit looser grip on stuff. So that's kind of the equivalent of like NCJUA is because all these insurance companies have smaller people branching off of them.
Right.
So, like Sageshore is a really good company, but Sageport is like their really nice Lamborghini company. So you
Gotcha.
would go to Sageshore instead of Safeport because of that
Okay.
poly B piping.
the best way
So
to think about this is the state has to, basically the insurance industry and the bureaus say we have to provide some sort of means for someone to insure their home. So all the major carriers, Allstate, State Farm, independent carriers like I can't think of a highly rated one at the moment, but although those are what we call A paper, they're reinsured, they're backed, um, and they have really low rates because the risks are lower. They'll take all the great risks, good credit, nice homes, younger homes, newer roofs, and then you've got a house that has a little, like what we say, a little hair on it, right? It's got some issues, like an older home that the HVAC isn't working, or is really old, or it's coastal right on the water. Major carriers are not going to take that risk. So, per the state, we have to have some sort of venue for them to insure their house. That's what the state has done. They've built this NCJUA that the state runs and operates, and the insurance industry, I wouldn't say it's not that they don't run it, but the state is providing their solution to properties that don't fit the mold.
Okay.
and it's
I
kind of
appreciate that.
backed.
Thank you.
Sorry, and thank you for answering that too, Ellen. It's yeah, so it has a bank backed by the state too. So it's state funded normally. You're going to see that because a lot of these companies are self funded, but NCJUA is going to be funded by the state.
And a lot of these things we're already looking at, right? We're already looking at HVAC age, but usually our mindset is they're going to have to pay for a new system within 5 years, 10 years. It's aging, want to get an inspection on that, et cetera. And we're thinking about DDRA, right? Now, if we add one more layer to that, the HVAC is really old, not only are you going to have to replace it, it's probably going to bump up your insurance cost by 20, 30%, which is going to impact your DTI. So same thing with the age of the house and many of the other things that are here on this screen.
Exactly.
Are people, insurance companies replacing their HVACs because of age?
No.
So
but they want you to do it.
But they're going to they're going to, when you're applying for that policy, Doug, underwriting might say no because your house, the roof is 25 years old, HVAC is 20 years old, etc.
I
You
fail to
also won't get a
understand why the
discount.
age of an HVAC system impacts the value of the home.
Yeah,
To
I
me,
mean, I get the roof,
those are
but
light years
I've had
apart.
insurance replace my roof, but my HVAC?
It's going to cost you an insurance. That's all. You may not be able to get an insurance policy through the normal means, Allstate, State Farm, depending on the carrier's rules and guides, and that fluctuates. Sometimes, like there was a time when you could put in a 25-year-old roof, no one cared. Right now, because of the height of the risk that we're seeing, or the industry is seeing, a lot of carriers are implying that, nope, it's 10 years old, go to the NCJ.
The roof makes total sense to me, but my house being 69 degrees as opposed to 61, that is absolutely ludicrous. I don't want to get on a big tangent here, but that seems completely out of pocket for them to make a decision on a policy based on the age of your HVAC system.
And that's the thing too, because, we kind of come at that angle as well. It doesn't really matter how warm or cold it is, but if that air stops going, you get mold, you get stuff of that nature.
That's fair.
And you get things that come about it. So you're seeing, okay, you don't have AC for a while, you might not have enough money to fix it at the time. So if you leave a house stagnant enough, especially in this humidity, you're going to get mold, you're going to get stuff of that nature. So, but I think it is a little bit ludicrous, and I don't get paid the big bucks. So I can't tell
that was
them
a great answer, though. The mindset is different. It's not the value of the house. Mm-hmm. It's the risk that could be involved that the insurance company would have to pay for.
And then, like, I know you were speaking. What were you going to say?
Where's my refund? Since I haven't had any claims, right? I mean, it's the same logic. It should at least work both. This is a different conversation. Sorry, I'm just having.
Well, this is a conversation for beers, yeah. Because it's kind of crazy, you see some of this stuff happen, and I'm sitting in my chair and I'm like, oh dear God, this is going to be a painful one, because it's a beautiful house and it's got maybe a new roof and it's got a good HVAC system. But the wiring, say it was built in the 70s and the wiring's not caught up. So it's the 2-prong instead of the 3. Well, that's another thing that's going to be a really big risk, because what if the circuit's overfunction? What if something happens? What if it catches fire? What if the fuse pops? And so they're trying to put all of this into like smaller pockets. They're trying to lump all of this together. It's just like going back, you might have one house that's made really good, but another house down the road was made by the same builders. Same thing happened. They didn't have, whether it was an AC problem, whether it was a roof problem, whether it was something, they're judging it off of that other house. So just because you have a diamond doesn't mean that they're going to treat it like a diamond. It's kind of the best way that I can break that down. And sorry if that doesn't make sense, but they're just trying to go off of the worst house on the block kind of right now.
So does it behoove a policyholder to let their insurance company know when they replace an HVAC, or they replace the roof, or they replace their water heater? Okay.
Yes. Yeah. So that does. Discounts would come their way. Also, another thing is too, if it's a gated community, let them know. If it has a neighborhood watch, let them know. There's senior citizen discounts they're putting into different companies now. So if they're over, I think 60, you can get a discount for that. Which I think is crazy.
We have a WhatsApp group called Neighborhood Watch. Would that qualify? Neighborhood Watch?
I put it down. I mean, because honestly, who watches a neighborhood better than a group chat? Because that's a lot of eyes on one thing.
Well, Malcolm, I don't want to cut you off, but I do have to
No,
get on another call at 11. So I just wanted to kind of set the stage for maybe a wrap up and any other questions.
yeah. Yeah. So, well, thank you guys for having me here. I know I definitely probably caused a little bit of a stir, but I just want you guys to know what to look for. Always try to find stuff updated. If they do stuff updated, if they redo a kitchen, tell them to let their insurance agents know. You want to be covered correctly. Sometimes you might pay a little bit more, but it's worth it in the end. And of course, when you don't have insurance, nothing happens. And when you have insurance, something happens. But it can always be vice versa. And thank you guys for having me again as well. Do we have any questions?
Thank you, Malcolm.
Yeah,
Yeah.
that was
Have a great day,
Thanks,
everyone.
Malcolm. I think it's
This has
one of
been
the
really
things.
helpful. And I know that you talked about causing a stir. I think it was the opposite. The great thing is when you actually do have conversation and it's not just a one-way presentation, a lot of really helpful info. So I really do appreciate all of it.
Yeah.
Anytime. Thank
And I
you
know,
guys for having
Brandon,
me.
you're always focused on post sale, right? I
Yeah.
can see this could be a really great piece that we could put together and send to our clients that after the sale, right? You know, hey, I know that you thought about making some improvements. Remember, these three things could actually improve your insurance position or costs. So
Yeah.
I think it's just another touch point.
Yeah,
For
Matt,
sure.
I'd definitely love to follow up with you and talk more. We don't necessarily have a preferred person right now. We do have info that we share, but if you would be interested in doing that and maybe putting together an info piece for our buyers and our sellers that we could share as part of our processes, I think that would be helpful. So no rush or anything like that, but we can talk about that offline.
Of course. Yeah, we'll talk about that offline. Thank you guys so much. And seriously, if you have any questions, I'll send my contact information in. And if you guys have a trusted insurance agent you already work for, call them too. I'm not saying just use me, but seriously, just get a hold of someone you trust and just talk to them and just have these conversations because sometimes you're going to want to pull your hair out. Sometimes I want to pull my hair out, but it's always good to have the conversation and have the knowledge.
Absolutely. Well, we appreciate it. Thank you so much.
Thank you guys.
All right.
Thanks, Malcolm.
Everybody have a great day. Let me know if you need anything, okay?
Have a blessed one, guys. Thank you.
See ya.
Bye.